I hate these tariffs.
Tariffs.
Tariffs is the most beautiful word to me in the dictionary.
Tariffs. They flip, they flop. We don't know if, when, or how much. But what we do know is that tariffs, or at least the threat of tariffs, are a key part of this administration's trade playbook with Canada. And with Canadian jobs on the line, the housing market won't be spared from the fallout. Home prices, construction costs, mortgage rates, everything is now in play. So today we're breaking down what this could mean for buyers, sellers, and the future of Canadian housing. And spoiler alert, it's messy. Okay, so let's set the scene. The US has threatened tariffs on Canadian products, making them more expensive for Americans to buy and sending ripple effects through the economy. When things get more expensive, people buy less. When people buy less, companies make less. And when companies make less, jobs disappear. Officially, these tariffs are about border security, but unofficially, it could be US protectionism, a pressure tactic for renegotiating trade deals with Canada, or just a way to fund another tax cut. At this point, it's anyone's guess. Canada isn't backing down. Retaliatory tariffs are already on the table, and if both sides dig in, we're looking at a full-blown trade war. For Canada's housing market, that means uncertainty, one of the rare things that both buyers and sellers hate. The Toronto housing market is split right now. Detached and semi-detached properties are still moving at a decent pace, but condos, they've stalled. Listings keep coming, sellers are clinging on to their prices for dear life, but buyers are in no rush to pay them. Mortgage rates have been falling, but a trade war could shake that up. So what happens if tariffs enter the picture? For buyers, their biggest concern is job security. At the end of the day, unemployed people can't buy a house. If a trade war slows down the economy and leads to layoffs or hiring freezes, fewer people, especially young people, will be in position to enter the market. Second, renovation costs will skyrocket. That fixer-upper in a great neighborhood, not such a bargain anymore. The price of imported materials like glass, steel, or appliances could jump overnight, making renovations way more expensive. The third thing is there will be some rare buying opportunities. If uncertainty continues, we could see a dramatic drop in demand, which means a short-lived window in which some buyers, especially well-capitalized investors, might find deals before the market corrects. For sellers, the first thing is that uncertainty will stall the market. Big economic moves make people hesitate. And Canadians are naturally risk-averse. We'd rather get walked to first base than swing for the fences and strike out, especially when it comes to personal finances. And that could mean longer selling times and tougher negotiations. Second is that job losses will bring more listings to the market. Yes, Canadian homeowners prioritize paying the mortgage above all else, but for some, unemployment and rising costs will force their hand. Some cities, like Hamilton, also known as the Steel City, are particularly vulnerable here, with entire industries at risk. Third is that new construction will slow down even further. This could actually protect home prices, but not for a few years. With fewer new homes being built in a country that's growing in population, existing homes become more valuable. And that brings us to maybe the biggest issue here, how these tariffs could impact the future of housing in Canada. Toronto already has a construction problem. The cost of building a home is too damn high, so developers and homebuyers have been pulling back. Just take a look at this chart. New condo sales are at a 30-year low. Now throw in tariffs that drive up the cost of materials and shrink the labor force, you've got a recipe for disaster. Builders rely on US imports for everything from steel beams to kitchen sinks. Even products that seem Canadian-made often have touched the US in some way. Take drywall, for instance. Canada produces the gypsum board that makes up the majority of all modern construction. But that thin piece of paper on the outside of the drywall sheet, yeah, that comes from the US. And even if you can find a Canadian-made substitute, tariffs will rebound off these goods too. If you're a Canadian business and all of your US competitors just increased their price by 25%, why wouldn't you increase your price by 24%? So developers have three choices: either eat the cost, pass the cost on to buyers, or delay projects entirely. Chances are they do all three. So what happens next? Well, that's the $762 billion question. Maybe this trade war escalates, maybe it fizzles out next month. But for now, uncertainty is the name of the game. And uncertainty affects confidence. Buyers might wait it out, sellers might withhold listings, and the market, it slows down. At the end of the day, the Toronto real estate market has weathered a lot of storms. Interest rate hikes, stress tests, land transfer taxes. It's resilient. If you're looking to buy or sell, the key right now is to stay flexible. Pay attention to what policy actually happens and not just the stuff that makes the headlines. Because with change comes opportunity, and this phase will have its winners too. If you're thinking about making a move, let us know. We help people navigate this market every day, and we'd love to see if we're the right fit to help you too. So reach out through the links below and let's get started. This is an ongoing story in Toronto real estate, so we might check back in with an update later on in the year. But in the meantime, what do you think? Will this trade war escalate or fizzle out? Let us know in the comments. And if you want to see how people actually live in Toronto, we've got a great neighborhood breakdown for you right here.